Friday, March 27th, 2026. Fun number 2. Day number 2. Like and subscribe. The $1 Investor. DGRO Breakdown. iShares Core Dividend Growth ETF. What DGRO is. DGRO is an ETF that invests in U.S. companies that consistently grow their dividends. Not just high dividend companies, but companies that increase dividends every year and have healthy earnings. To be included in DGRO, companies must have at least 5 years of dividend growth, have healthy payout ratios under 75%, have positive earnings outlook, be financially strong companies. This helps avoid dividend traps, companies that pay high dividends but are actually struggling. Expense ratio, 0.08%, very cheap. Dividend yield, 2.3% to 2.5%. Holdings, 400 companies. Strategy, dividend growth, plus. Large cap, plus. Quality companies. Top companies inside DGRO. From my fund data, DGRO owns companies like ExxonMobil, JP Morgan Chase, Microsoft, Apple, Johnson & Johnson, Broadcom, AbbVie, Procter & Gamble. These are blue-chip companies, the companies that basically run America. That's why DGRO is considered a core long-term wealth-building ETF. Like and subscribe. The $1 Investor. What Wall Street thinks about DGRO. This is important for our video. Ratings. Morningstar, 5 stars. Morningstar medalist. Rating, gold, their highest rating. This means analysts have high confidence the fund will outperform over time. Analyst consensus. Wall Street rating on DGRO holdings, moderate buy. Performance, nearly 20% return last year. Strong long-term performance with lower volatility than the S&P 500. This is why a lot of analysts call DGRO a quiet compounding machine. 5-year forecast, what experts expect. Here's the realistic part, not hype, just facts. Expected returns. U.S. stocks expected 6% per year over next 5 years. Goldman Sachs forecast. Dividend growth ETFs like DGRO historically return around 8 to 10% per year long term. Some forecasts estimate DGRO could reach $107 in 5 years, from around $70 today. What that means, if that forecast is close. Price growth, 6 to 8% per year. Dividend growth, 5 to 7% per year. Total return, 8 to 10% per year. That's the compounding machine effect. Simple way to explain DGRO to blue-collar workers. DGRO is a fund full of companies that give you a raise every year, not a paycheck, a dividend raise. So every year your income grows, your shares grow, and your money grows. That's how regular workers build real wealth, slow, steady, and consistent. Why DGRO is powerful for my dollar-a-day strategy. Because DGRO gives you dividend income, dividend growth, stock price growth, low fees, diversification, 400 companies, less volatility than growth stocks. This is what's called a core portfolio builder, meaning if someone only owned one ETF for 20 years, DGRO could be that ETF. What DGRO is best for? Goal, DGRO. Passive income, yes. Long-term growth, yes. Retirement investing, yes. Stability, yes. Get rich quick. Number day trading. No. This is a slow wealth builder. In the big picture, this is important for you followers. If DGRO returns 8% per year, what happens? 5 years. Money doubles every 9 years. 10 years. Big snowball. 20 years. Massive snowball. 30 years. Financial freedom snowball. This is why consistency beats amount. Not how much you invest, but how long you invest. My honest opinion, based on data, DGRO is one of the best dividend growth ETFs. Low cost, strong companies. Wall Street likes it. Morningstar loves it. Built for long-term compounding. This is a real wealth-building fund. I'm not trying to get rich overnight. I'm buying companies that pay me to own them. And I'm doing it $1 at a time, 1 day at a time. Because small seeds grow into redwood trees. Like and subscribe. The $1 Investor. $1 a day. My DGRO investment journey. What's up, everyone? Today I want to talk about one of the main investments in my portfolio, and that is DGRO, the iShares Core Dividend Growth ETF. But more importantly, I don't just want to talk about the fund. I want to talk about the journey, the routine, and what this will mean 5 to 10 years from now. Not just for me, but for anyone out there who thinks they don't make enough money to invest, because I'm here to prove that wrong. $1 at a time. Let me show you what I'm doing in my Empower Retirement account through my 457B. This is not a trading account. This is not gambling. This is long-term investing. This is planting seeds. Right now, DGRO is one of the main funds I own. This fund holds about 400 companies like Microsoft, Apple, JP Morgan, Johnson & Johnson, Procter & Gamble, AbbVie, ExxonMobil, some of the biggest, strongest companies in the United States. These are companies that don't just pay dividends, they grow their dividends. That means they give investors a raise every year. So what am I doing? I have a recurring investment setup. Every single day, I buy $1 of DGRO. Every day. Automatically. No excuses, no emotions, no trying to time the market, just consistency. Some people spend $5 a day on coffee. Some people spend $10 a day on fast food. I'm buying ownership in America for $1 a day. And when you look at my position, you can see I own shares, I have an average cost, and yes, sometimes I'm up and sometimes I'm down. That's normal, that's investing. But I'm not worried about what happens in 1 day, 1 week, or 1 month. I'm thinking 5 years, 10 years, 20 years. Because investing is not about getting rich quick. It's about getting rich for sure, slowly. Now let's talk about DGRO and what Wall Street thinks about this fund. DGRO is a dividend growth fund. That means it specifically invests in companies that have a history of increasing their dividends and that have healthy financials. They screen companies to make sure they're not overloaded with debt and that their payout ratios are safe. So this fund is focused on quality companies, not risky companies with high dividends that might cut them. The expense ratio is very low, about 0.08%, which means almost all of your money stays invested and working for you. That's important because fees destroy wealth over time, and this fund keeps fees very low. Morningstar, one of the biggest investment research companies in the world, gives DGRO a 5-star rating and a gold rating. That's their highest level of confidence for long-term performance. Analysts like this fund because it focuses on profitable companies, companies that grow dividends, and companies that are financially strong. Historically, dividend growth funds like DGRO have returned around 8% to 10% per year over long periods of time when you include dividends and growth. Now let's think about what that means. If something grows at around 8% per year, your money roughly doubles every 9 years. So let's talk about the future. If I keep investing $1 a day, that's $365 a year. But it's not just the money I put in, it's the growth, the dividends, and the compounding. In 5 years, the account could be worth thousands. In 10 years, it could be worth tens of thousands. In 20 years, it could be worth hundreds of thousands. In 30 years, that's when you start seeing real financial freedom. This is what people don't understand. The stock market is not a get-rich-quick scheme. It's a get-rich-slow machine. But only if you are consistent. Most people try to invest when the market is going up. They stop investing when the market is going down. They invest big amounts once in a while instead of small amounts all the time. I do the opposite. I invest small amounts every single day. When the market is up, I buy. When the market is down, I buy. When there's a crash, I buy even more shares for the same dollar. That's called dollar cost averaging, and it's one of the most powerful strategies for long-term investors. So what does DGRO mean for me 5 to 10 years from now? It means my dividends will be higher. It means my shares will be higher. It means my account value will be higher. It means I will own more and more pieces of real companies. It means my money will start working harder than I do. And that's the goal. Because wealth is not built from working for money forever. Wealth is built when your money starts working for you. I'm a blue-collar worker just like many of you watching this. I'm not a millionaire. I'm not a hedge fund manager. I'm not on Wall Street. I'm just consistent. That's it. Consistency beats amount, time beats timing, patience beats emotion. So when people tell me I can't afford to invest, I tell them this. If you can afford a soda, you can afford a share. If you can afford fast food, you can afford your future. If you can afford to scroll on your phone for an hour, you can afford to learn how money works. Because the biggest difference between rich people and poor people is not income, it's ownership. DGRO helps me own companies that pay me every single quarter, and those payments grow over time. That's like planting a tree that grows bigger and produces more fruit every year. So my daily routine is simple. Wake up, go to work, buy $1 of DGRO, repeat. And I'm going to do that over and over and over again until that small seed turns into a forest. Remember this, most people overestimate what they can do in 1 year, but they underestimate what they can do in 10 years. I'm not trying to hit a home run, I'm trying to build a system, because systems build wealth. So this is my DGRO journey. This is my $1 a day journey. This is my consistency journey. And 10 years from now, we're going to look back at these small daily investments and realize they were never small at all. They were seeds. And seeds, when you water them every day, grow into redwood trees. I'll see you in the next one. Like and subscribe. The $1 Investor.